Casting in talk. And today I have my special guest. One of his advocacy of building personal wealth through home ownership. None other than Mr. Ed Parcaut.
How you doing, Daniel?
Welcome, Mr. Ed on Entrepreneurship 101. Can you please introduce more about yourself that I miss?
You didn't miss much, but I own a mortgage company called Lending for Living, but I also have probably about another 4 businesses I started in the last year just because of the change that I've seen in the economy and everything else. I just think it's really important to, stay ahead and be ahead of different things and have multiple streams of income.
Yes, and thank you so much for sharing your knowledge and wisdom to the world, Mr. Ed. Thank you, thank you. So today, let's talk about being a founder and CEO, lending for living. So the founder lends. Before lending for living, you saw a gap. What was the specific frustrating or adverse financial reality you witnessed that made you say there has to be a better way? What is a personal experience story from a friend or systemic failure you observe in the market?
I don't know if it was so much systemic. I found out when I was younger, I really enjoyed helping people get into homes to change their trajectory of their family and everything else because it's the one thing that can change the amount of equity you can build over time. I think I saw a thing the other day. A homeowner has 44 times more equity, or I should say, more income than does um, a renter. And so, with that information there, so I've been in this industry doing lending for probably 25 years. I've owned multiple companies. Lending for Living is my most recent one, which recently 2000 and something, like 2005, I think. And it's about helping people get to that point. But there's so many other things to help them with besides just getting that house, getting their finances and connecting with everybody else in the system to help them get better. Because even though I do one thing, if they don't
Mhm.
have some way to protect it, then it doesn't matter what I do. They could potentially lose it.
Redefining the credit worthiness, Mr. Traditional lenders often say no based on narrow criteria. What is the core human centric factor or a data point that lending for living looks at the other ignore it? And why is it more truthful indicator of someone's ability to committed to repay?
Are you talking about the actual credit report number? So everybody in
Yes.
lending, they focus on the generic term FICO, which is there's 3 scores from 3 different bureaus, and the bureaus and I don't know how it is where you are, Daniel, but in here in the United States, they look at the 3 different bureaus, and by region, one of those is more accurate than the other two. The reason I'm bringing this up is there's a big change to try to get rid because of cost. The cost of credit has got so costly. It used to cost like $50 to run credit. Now it's 200 and some dollars just to run a credit report. And the reason it's gotten so expensive is because of the fact that the bureaus used to sell when we would run a credit report of somebody, a hard pull, they would sell that information to a marketer who would then call your clients and do all this stuff. They'd get like 92 phone calls. Now they can't do that. It's illegal. It's called a trigger lead. Because of that, the cost is going so much higher. With that cost going higher, they're trying to take it down from numbers to just one number. And my problem with that going forward with what I see, that could be the lowest of those 3 numbers. And so then that's really going to affect your rate, what you can qualify for and everything else. So that's just on the credit side there. But how I look at credit for people is whatever your credit score is, even if it's good, I try to get it better each time because if you look at my book, there's the first chapter is all about credit. It's because it's the most important thing to get going on buying a house is where your credit is at. And if it's not good enough, how do we get it there? I worked with a guy for 3 years to get his credit high enough so we can have him buy a house.
Interesting, Mr. Ad. So, lending for living is a powerful name. It implies funding life, not just a consumption. How do you balance the compassionate mission for helping people in pivotal moments with the hard-nosed financial discipline required to run sustainable, responsible lending business?
Well, it's different now. And what I mean by that is in 2005, when we had a downturn here, there was three quarters of people had a FICO score under 640 or below. Now it's complete opposite. 75% of people have a FICO score of above 640, and only a quarter of them have it 640 and below. So we don't run into that much. And if we do, we just help them get that credit up by there's a few things you can do to get it up. And that's how we work with that. We put a plan together for the ones who aren't available now, and then once that they're going through that plan and it's done, then we can get them in the house. However, with that being said, it's really the affordability that's the biggest problem right now, Daniel. It's because of the houses are so expensive versus how much income it takes. It takes 5 times your income to buy a house. What I mean by that is with the payment kind of thing. And so it's very hard for people to buy houses. And where I live in California, only 44% of the people can actually own a home.
Say, but that's the reality, Mr. Ad. We kept you up to the night before you funded your first real loan. What is the fear of the money, the fear of the borrower's situation, or the weight of starting something so consequential?
Daniel, I don't understand your question because
So let's talk about the first dollar you lent. What kept you up the night before you funded your first real loan? What is the fear of the money, the fear of the borrower's situation, or the weight of starting something so consequential?
I don't think either one of those things. The first one I did was so long ago. Lending was totally different back then. We didn't have the risk-based pricing had now. We didn't have certain things. So I would almost say it was easier to lend back when I first started than it is now. Just because of all the different things. And the government got really into our business back in 2006 with the downturn we had, that they changed a lot of things, made some things better, but with when you have people get into your business who've never been in your business and they put regulations, and then they can affect certain things. And now, so nothing really keeps me up because I do my job very well. Also, that's the other thing is I'm a veteran from the United States Navy. We have systems in place that make sure nothing has a problem so that you don't have to worry about anything going through. I can close a transaction in 8 days, which is unheard of, but that's what we can do because of our systems. So nothing really keeps me up because of where I come from. Plus, we already had things in place way back then.
Very well said, Mr. Ad. So, fintech is built on innovation, but lending is built on regulation. How have you navigated building a fast tech forward company while moving to celebrate or deliberate a careful pace required by compliance and consumer protections laws?
Well, and that's what I'm talking about. So, because the fastest we can actually do a loan because of regulation is 8 days. There is you sign so when you sign this thing called a loan estimate on the first day, you can't sign your loan documents for 7 days. So I've done everything to get around that as fast as I can, but the fastest we can get it done is 8 days. So that is I always work around regulation legally, and then because a lot of people will do a loan in 30 days or 21 days, but we can do it much faster, and everybody else could if they put systems in place. But the regulations are there to protect us and to protect the borrowers, but most of the time they just get in the way, and so we're stuck. There's nothing we can do. That is one of the reasons where we haven't had as much fintech we do have it a little bit in our industry, but they can't do any major stuff that's different than anybody else because of the huge regulation that's in this industry.
Mr. Ed, the 2020 pandemic was a stress test for every lender. What did the period teach you about your borrower's resilience and strength of your own underwriting and the kind of compassionate flexibility that must be baked into responsible business model?
Well, 20 so in the lending industry, 20 only the first 3 months of 2020 was bad for us. And what was bad for us is we couldn't fund a loan. We couldn't get things done. We couldn't get things closed. Everybody was eating between 5 to 10 million dollars on their line a month. And finally we were able to get certain things in place and be able to do certain things. so that we could actually fund loans. And then from 20, the rest of 2020, 2021, and 22 were amazing times for us in this mortgage industry. However, we put so many people on low interest rates back then that it actually stopped the existing home sales from going at 85% down to 35%. So there's not a lot of business going on right now because of how many people have such low interest rates. So that's what the problem was from that time, Daniel. Is I knew at the time we were putting everybody in these rates that I called it abusive relationship. You won't do certain things because it's so safe and comfortable with that rate you have that you won't get out of that relationship with that house. But you should. You've had two extra kids. You don't have enough room. You need this, but you don't want to make that move because of the payment going up. So that's the only downside from that. The positive thing today is there's more people with a 6% interest rate or greater than with a 3% or less now because people have been making those moves.
Mr. To lend, you need a capital, right? So, what's more challenging to secure and convince the initial venture capital to build the technology or the ongoing debt warehouse lines to find the actual loans? How do you tell the story differently to each audience?
And in our industry, it's not. So I've been a broker for 25 years. So we don't fund on our line anymore. We just we work with wholesale lenders that do the lending, and they don't really lend their money. They're lending the secondary. I mean, there's lines of credit that everybody has to lend off of, and they're paid off of, but they sell to the government. They sell to Fannie and Freddie, so it gets turned off their line pretty fast. It's a totally different world today. It's not like the old, and I don't know if you ever seen, but there was a movie that's called The Wonderful Life where you have George Bailey who goes to he runs a savings and loan, and people come in, they want to borrow money for a house, but it's really everybody's money that's in that savings and loan is what they lend out for that house. It's not built that way anymore. It's all institutionalized, so it's a totally different world. So it's not like that anymore. So there, you don't actually have to use your own funds to lend anymore.
Modification for sure. So, metrics that matter, Mr. Ad, beyond default rates and APR or APRS, what is the key human metric you track to know you are succeeding? Is it a customer testimonials, repeat usage, or the stories of a major life progress enabled by loan?
How I know I'm doing well is by the reviews I get from my clients, helping them get into homes. That's all I look at because I help a lot of people get into homes, and that's what's the most important thing. People always come back, refer more and more people, and that's also a positive that you have. If you do, you look at the reviews, see what people say, and then when they refer other people, you're doing a good job.
The yes and the no, Mr. Ad. Saying no to someone in need is agonizing. How do you equip your team to deliver no with dignity and perhaps with guidance rather than a cold rejection? What is the protocol?
Because we don't say no, we say just not today. And then we put a plan together for them to purchase in the future. And it's up to them to follow the plan. If they follow the plan, they'll be able to purchase down the road. If they don't follow the plan, then that falls on them. But we don't just say no, we put a plan together for them.
Interesting, Mr. Ad. So, fintech is tempted to keep adding products like banking, investing, insurance. What have you deliberately chosen not to do in order to stay fiercely focused on being the best of your core lending mission?
I've actually niched down more. I focus on veterans and then business owners and reverse mortgages. That's all I focus on. I've cut everything else out. Now, if something comes to me that's a conventional loan or whatever, I'm not going to turn it away, but it's not who I market to. It's not who I talk to. And that's what I've done differently. I learned to niche down. You really need to know who your client is and focus on those clients. And that's what I've done with the different websites and different things I have is they're focused on just that one client so that you know who you're talking to.
One client at a time. In a world of faceless apps, Mr. Ed, lending for livings model seems to require a deep trust. How is the trust built into a product, experience, and customer journey? Is it transparency, human contact, or something else?
I think it's more, I think what we're going to see, and this is how I've always been, is I pick up the phone and I talk to somebody. I call them. A lot of people want text or whatever, but in our industry, we're giving such information that you can't text certain things because you don't want that record out there for somebody to find it on their text. And I'm not saying illegal stuff, just, personal information. So we do that. We do a face to face, and we also do talking on the phone. We do video. We do everything and in person. I think it's going forward in the next couple of years, it's even going to more and more as a personal to be seeing somebody, because I create one of the largest debts in your life. You're going to want to see me about that debt because that's just huge. It's not like you're buying something on Amazon. It would be nice to be able to do that where you could buy a house and the loan and everything on Amazon, but it's not going to happen with the regulations that's out there. So right now it's all about being personalized service for your clients.
The future of living, Mr. Ad, as you look ahead, what does lending for living need to mean in the 5 years? Are you funding a new categories of life transitions, integrating with the new parts of financial ecosystem, or redefining success for your borrowers?
We're just focused on the borrowers. We're just focused on, the three niches that we focus on and how we can build it better for them and the system's better for them. The thing what we always try to do is how can we make it faster and easier? And that's what it's all about. Making it easy for your clients so they don't have to stress over certain things that they need. That's the focus. And that's what we focus on.
Looking forward for that focus, Mr. Ad. So, do you see legacy banks as competitors to disrupt, or is a potential future partners whose infrastructure you could leverage to scale your mission?
Um, I I don't know if any of the thing you just said was gonna help me. I'm sorry, Daniel. You say a lot of stuff in a sentence. It focusing forward, I think the most important thing still is I'm gonna say it's not getting more shiny things. It's not getting this. It's really just stay focused on your clients, stay focused on your business partners that you work with that maybe refer stuff. All those different things. Focus on that. Use AI when you can to make your life easier, but still keep that personal touch. Pick up answer the phone, do those things. Don't let it go to voicemail. And that's, I think, the most important thing.
People, authenticity, and connection. Founders, reality, leadership, and personal sustainability. Yeah, Mr. Ad. As a CEO, you carry the weight of the company's financials and weight of your borrowers' hopes. How do you personally manage these dual accountability? Where do you put the stress so it doesn't consume you?
I delegate. That's what I've learned to do over these years. You have to find the right people to put in place and delegate to them so you can focus on what your mission is. You don't want to be in the trenches when you need to really see what's going on. You have to stand back. So you have to get the right people in place. Do what you do best and only do that. That's all I do. I focus on what I do best.
And congratulations for doing that, Mr. Ed. And how's being the founder or CEO of this company? One so tied to profound human moments or change you differently than you build a B2B or SAS or e commerce company?
Did you ask how is it different? Is that what you asked, Daniel?
Yes, please.
It's all because the reason it's different is because you're dealing with clients. You're dealing with a lot of information of the clients to figure out whether or not they can qualify. We have real estate agents to take them out to find the house. I'm the one that has to tell them whether or not they can afford the house. There's two totally different things. With a SaaS, it's really important, but you're dealing with the software more than anything else. You're not dealing with the client. I'm dealing with a large loan. People trust me. People want to be with me. Those are kind of the different things. Because I also have a SaaS company. I also vibe code with a bunch of stuff I do. I've created apps for my industries and apps for outside of my industry just to make things easier and better for all my people that I work with.
Early in a capital intensive business, founder salaries are often minimal. How did you navigate your own personal finances and family pressure while the company was finding its footing? What kept you going?
It does. There are times where the owner doesn't get as much money, but you just have to put money aside. The positive thing in our industry is we don't we only have to if we pay for it. Only thing we're out to start with is the credit report. and employees. So the employees are the only thing. So you don't hire employees until you need them. And how I do it differently now is I do a lot of contract. I don't hire, I have out of state contractors instead of employees here in California. That's what's made my life so much easier.
Easier for sure.
And
So
also
if you
one
have,
more thing, Daniel, we
yes, go ahead.
because of stuff we use, we don't need as it's so automated and so much AI and so many things we do through the process of underwriting and getting the loan ready that we don't need as many people as we used to do. I used to have 4 people just to support me for the loans I was doing. Now I only need a third of a person to do that because of how the systems we have in place does things so much for us. Plus, our partners that we work with, they do a lot on their side that we used to have to do on our side. So that's the big difference. Everything's getting more automated, and that's what's helping things get. A lot of people are not going. You don't need as many people. So if you're looking at from the standpoint of being an employee at a company, it's not great for you. But being the owner of a company, you can do so many things now without all the overhead.
Hmm. So you have investors that there's inherent tensions between growth returns and mission or underwriting caution. Can you share a time when you had to fiercely advocate for the mission focused path against a more aggressive financial one?
We don't really have investors. It's just us. We're owned internally. We don't have investors, so we don't have that thing there, Daniel. We don't have that.
Okay, so Mr. Ed, before we wrap up our discussion for today, I'm inviting you to please do listen to my other podcast, people. My other podcast, because my abstract essay is already in sixth season, abstract poetry in third season, and of course my book 101 review in sixth season as well. Comedy 101 third season, and food 101 in sixth season too. Geography 101, love letters, movie 101 review, music 101 are in fifth season, science 101, sex 101 fourth season, and spiritual awakening, trivia 101, law 101, mental health 101, motivation 101, entrepreneurship 101, and Bible verses 101 are my baby podcasts. Please listen to them wherever you listen your podcast. So Mr. Ed, tell us, for the aspiring entrepreneur who wants to build a business that is both profitable and profound force for a good in people's lives, what is the one non-negotiable piece of advice you give them before they start?
Know who your client is. Know who your perfect client is, which people call avatar today in certain markets. That's what I would tell you. Know who you're going to be working with. You need to know that up front.
Yes, people, know your customer for sure. And Mr. Ad, thank you so much for sharing your knowledge and wisdom to the world. So, can you please invite our listeners to support your business, your advocacy, or whatever projects that you're doing right now?
Yeah, just go to my website, edparcaut.com. That's EDPARCAUT.com, and you will be able to find out everything I'm doing there. And I appreciate the time being on here today, Daniel. Thank you so much.
No worries, Mr. Ed. Yes, people, let's support Mr. Ed Parcaut, because if you support him, for sure, more and more empowering advocacy like this to rise. So, Mr. Ed, thank you so much for your time.
Thank you, sir. Have a great day.
Modicam people, see you soon.